How much money do I really need to retire? I'm Brett Fellows, certified financial planner, and today we are tackling this question that haunts pre-retirees. Last week, someone told me, Brett, I've got $2.1 million saved up, but I am still terrified I will run out of money. Another person with $800,000 said, I don't know if I can ever afford to stop working. But here's what's shocking. Both of these people could potentially retire today with the right strategy. The problem isn't the amount that they've saved. It's that they're asking the wrong question entirely. By the end of this episode, you'll understand the 3 retirement spending levels every CRNA needs to know, why your age changes everything about your magic number, and the asset location strategy that could save you $300,000 in retirement costs. Let's start with reality. You're making excellent money, maybe $180,000 to $250,000, depending on your market and employment structure. But your career demands might force earlier retirement than you had planned. The physical toll, the stress, the responsibility of holding someone's life in your hands during surgery. Many CRNAs want out by 55 to 60, not because they don't love the profession, but because their bodies and minds need a break. And here's the kicker. If you retire at 55, you might need $3 million. If you wait until 65, that number could drop to $1.25 million for the exact same lifestyle. And that's not a typo. The age you retire changes everything. Before we talk specific numbers, you need to understand there are 3 distinct retirement levels. Level 1, survival retirement. You can cover basic expenses, but money stress continues into retirement. You are constantly watching your spending and worried about major expenses. For CRNAs, this typically happens with under $1 million saved. Level 2, what I would call comfortable retirement. You can maintain your current lifestyle without major worry. You can travel, pursue hobbies, and help family members when needed. And you never have to think twice about a reasonable purchase. For CRNAs, this typically requires $1.5 million to $2.5 million depending on your lifestyle and location. And then level 3, premium retirement. Money is never a concern. Multiple homes, extensive travel, supporting family members, major charitable giving. This is true financial freedom. For CRNAs, we're talking $3 million to $5 million or more. But the key insight is that most CRNAs can achieve level 2 if they plan properly. But having the money is only half of the battle. Let me show you the exact numbers for a CRNA wanting $10,000 per month after taxes in retirement. Retiring at age 55, if all of your money is in pre-tax accounts like 403b or traditional IRAs, you need $3 million. With a 50-50 split between pre-tax and taxable accounts, you need $2.7 million. Retiring at 60, all pre-tax accounts, $2.25 million. With a 50-50 split, $2 million. Retiring at 65, all pre-tax accounts, $1.45 million. A 50-50 split, $1.25 million. Notice the pattern there? Working 5 more years from 55 to 60 can save you nearly $1 million in required savings. But there's something else happening here that could save you even more. This is the strategy most CRNAs completely miss, and it could be worth hundreds of thousands to you. It's not just how much you save, it's where you save it. Most CRNAs have everything in their traditional 403b or 401k because that's what we're told to do. Max out your retirement contributions, get the tax deduction, and let it grow tax deferred. But this creates what I call the pre-tax prison. And so here's why asset location matters so much. First, there's the healthcare gap problem. If you retire at 55, you're facing 10 years before Medicare kicks in. Health insurance could cost $1,000 to $2,000 per month. That's potentially $240,000 in healthcare costs before you even qualify for Medicare. Then there's the traditional 59.5 penalty wall. If everything's in traditional IRAs, pre-tax accounts, you can't touch that money before 59.5 without paying a 10% early distribution penalty. However, if your money is in a 401k or 403b, the rule of 55 lets you access it penalty-free if you leave your job at age 55 or later. And then the tax efficiency factor. Money in a taxable brokerage account can be accessed penalty-free at any age. But even better, if you've held investments for over a year, you pay capital gains rates instead of ordinary income rates. And for many CRNAs, that's the difference between paying 22% or more versus 15% in taxes. This is why that 50-50 split I mentioned saves you so much money. You have flexibility and tax efficiency that pure pre-tax only savings cannot provide. Here's the systematic approach we use with our CRNA clients. Step 1, calculate your true spending need. Don't assume you need to replace your full income. A CRNA making $200,000 might only need $130,000 to $140,000 in retirement because we have no more payroll taxes. That's a 7.65% savings. No more retirement contributions. This could be a 15% savings. No more work expenses like scrubs, educations, or dues, and potentially no more mortgage payments. But you also have to add in new retirement expenses like healthcare and increased travel. Then step 2, subtract your guaranteed income. Get your actual Social Security statement from SSA.gov. Most CRNAs can expect $30,000 to $42,000 a year annually. But don't guess. Get your real numbers. If you have pension benefits from hospital systems, or if you plan to work PRN in early retirement, include those figures too. And then step 3. Calculate your portfolio need. Take your spending need minus guaranteed income to find your gap. Then apply the appropriate withdrawal rate. If you're retiring at age 55, use 4% to be conservative. Retiring at 60, 4.5 to 5%. Retiring at 65, 5% to 5.5%. The longer your retirement, the more conservative you need to be. But here's the problem waiting for CRNAs with substantial savings. The tax issue you are potentially facing with your pre-tax 403b or 401k. Because every dollar in your pre-tax 403b will be taxed as ordinary income when you withdraw it. If you retire with $2 million in pre-tax accounts, your required minimum distributions at age 73 will be massive, potentially pushing you into the highest tax brackets and triggering Medicare surcharges. This is where successful CRNAs need advanced strategies, like Roth conversion planning. Systematically move money from pre-tax retirement accounts to Roth accounts during lower income years. This is especially powerful in early retirement before Social Security kicks in. Tax-diversified withdrawal strategy. Live off of your taxable accounts in early retirement while doing Roth conversions. And take advantage of the 0% capital gains bracket if your income is low enough. And Medicare income management. Required minimum distributions can trigger massive Medicare premium surcharges. So proper tax planning can help you avoid these. So if you're a CRNA with substantial savings, here's what you need to do. If you have under $2 million, focus on aggressive accumulation. Max out your 403b or 401k, but also consider building taxable accounts for future flexibility. 2 to 3 million, you're in the optimization phase. So work with someone who understands CRNA specific issues to model different withdrawal strategies and tax planning. And over 3 million, you likely have the flexibility to retire early if you want to. So focus on creating a sustainable income plan and advanced tax strategies. So what's enough for a CRNA? Here are the realistic ranges. For $10,000 a month in after-tax spending, if you're retiring at age 55, 2.7 to 3 million. Retiring at 60, 2 million to 2.25 million. And retiring at 65, 1.25 to 1.45 million. For $7,000 a month in after-tax spending, retiring at age 55, 1.8 million to 2.1 million. Retiring at 60, 1.4 million to 1.6 million. And retiring at 65, $900,000 to $1 million. But remember, these numbers assume you have the right asset location and withdrawal strategy. Get those wrong, and you could need significantly more. Here's a trap I see successful CRNAs falling into: working too long and accumulating too much money. They end up spending their retirement doing complex tax planning instead of living their lives. I have worked with pre-retirees who had $2.5 million at age 65 when they could have retired at age 60 with just $2 million and had the same lifestyle. So they worked 5 extra years of their healthiest retirement years just to create tax problems for themselves. So the goal isn't to accumulate the most money possible. It's to accumulate enough money to live the retirement you want when you want it. Your retirement number isn't some generic amount you read online. It's your calculated number based on your specific expenses, income sources, and goals. As a CRNA, you have unique advantages: high income, ability to work PRN in retirement, and valuable skills that frankly create options. But you also have unique challenges: career burnout, physical demands, and likely most of your savings are trapped in pre-tax accounts. The key is planning for these realities while you still have time and options. So if this episode raised questions about your specific situation, remember that precise planning beats generic rules every time. You have mastered one of the most demanding careers in healthcare. Apply that same level of precision to your retirement planning. We have put together a retirement checklist to get you started. It should get you thinking about these 6 critical areas you need to address: your financial foundation, your investment strategy, tax planning, healthcare transition, career identity shift, and legacy planning. Check it out in our show notes below. Thanks for listening to Money RX for CRNAs, and until next time, remember, your retirement isn't about having the most money, it's about having enough to retire on your terms.
This podcast is for informational and entertainment purposes only. It should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, financial, or other professional services.